हेलो एवरीवन, वार्म वेलकम टू टेस्ट बुक सुपर कोचिंग। माय नेम इज माधव अरोड़ा। मैं आप सबका हार्दिक स्वागत करता हूं आपके अगले सेशन में, जिसकी सीरीज का नाम है बेसिक्स ऑफ फाइनेंस। एज वी ऑल नो, फाइनेंस इज गोइंग टू प्ले अ रियली वेरी इंपॉर्टेंट रोल फॉर ऑल योर अपकमिंग एग्जामिनेशन। स्पेशली अगर मैं बात करूं आरबीआई की, सेबी की, और उसके साथ साथ इफ वी टॉक अबाउट द अदर रेगुलेटरी बॉडीज लाइक IRDAI, SEBI, हर एक रेगुलेटरी बॉडी जिसकी हम बात करते हैं, दे ऑल आर टर्म्ड एज financial organizations, and that is the reason finance is going to play a really very important role in your upcoming examination. In order to help you guys so that you can clear your upcoming examination, I have started this series. I have named the series as Basics of Finance for all those candidates who all are preparing for RBI Grade B 2025 examination. And today in this particular session, I will be talking about non-banking financial companies. Before I start my discussion with the term non-banking financial companies, I would like to ask a very simple question from you all. The very simple question is, what is a bank? So the moment you say bank, we have n number of answers. But if I explain the term, then what would I say? I would say, so basically what is bank? Bank is a financial institute. First is, so bank is a financial institute, and this institute has a power to accept deposits from the public. This institute has a power to provide loan to the public. I repeat, what is a bank? So bank is a financial institute which has a power to accept deposits. It has a power to provide loan. But the question is, sir, do you think that these two basic functions are more than enough to call a financial institute as a bank? No, sir. A financial institute is termed as a bank, or I would say every financial institute receives the license to operate as a bank or to be called as a bank by RBI. So it is Reserve Bank of India which is responsible to provide the license, and every bank is operating under the Banking Regulation Act 1949. Banking Regulation Act 1949, and obviously bank is fulfilling the norms which are mentioned under RBI Act 1934. Now the question over here is, so what are non-banking financial companies? First of all, so you are saying that these are non-banking financial companies. That means they are not bank. They are not bank basically means they don't have the license. They don't have the license to be termed as bank, or they don't have the banking license. That is the first point. Second, RBI has not allowed these financial institutes to operate as a bank. But so one side you are saying that these are non-banking means they are not bank, but along with that you are saying that these are the financial companies. Why I'm saying these are the financial companies? Because these companies, they are involved in financial activities. These companies are involved in financial activities. Now you must be thinking that, sir, you are confusing us. You're not explaining anything, rather you are confusing us. On one side you are saying, what is a bank? So bank is a financial institute which possesses the banking license, and the banking license is given by RBI, and bank is operating under the Banking Regulation Act 1949 as well as RBI Act 1934. But on the other side, those financial institutes, I repeat, those financial institutes which are involved in financial activities, which are involved in what? So which are involved in financial activities, but they don't possess the banking license, they are basically termed as non-banking financial companies. But that doesn't mean that these are unorganized organizations. That is not the case. These are organized, or I could say that they are also covered under organized sector. And what I mean that they are covered under organized sector, this means that they are also regulated, monitored and inspected by RBI. Now the biggest question, $1 million question, is again the same. So what is a difference between what is a difference between a bank and NBFC, how NBFC is different from bank, how many types of NBFCs are operating in the economy, and if there is any issue related to NBFC, who is going to address that issue. So I will be answering all that question. Warm welcome everyone. In today's session, we are going to start with a really very important topic, that is NBFC. Remember one thing. If you are preparing for the regulatory body exams, let it be RBI, NABARD, SEBI, or SIDBI, IDBI, or for that matter IFSCA, remember one thing, the basics of finance are very important. Until and unless you are aware of the important concepts, important aspects, it will be impossible for you to understand the financial news, and if you are not aware of the financial news, it will be impossible for you to clear your examination. So let's begin. Let's start our discussion with the first point. I'll start by discussion with what is NBFC. After discussing NBFC with you, what is a difference between NBFC and bank, and after covering the difference between NBFC and bank, we will be moving ahead. Is it clear? Shall we begin, guys? Shall we begin the discussion? Okay. So the first question I have for you all is, so what do you understand by the term NBFC? The moment we use this term, that is NBFC, we need to understand NBFC stand for non-banking financial company. And these companies, they are registered under the Companies Act 1956. So first thing is, NBFC is registered under which act? Then my answer would be, sir, NBFC is registered under which act? My answer would be NBFC is registered under Companies Act 1956. NBFC is involved in what all businesses? Remember, sir, NBFC has a power to provide loan to the public. NBFC has a power to provide loan or advances to the public, as well as NBFC has a power to accept deposits. NBFC has a power to accept deposit just like a bank. Second point we have is, the second point says, NBFC could be a financial institute which is involved in the acquisition of shares. That means the institute which is involved in the acquisition, in the purchase of financial instruments such as shares, stocks, bonds. If you remember, in my very first session of this series, that is Basics of Finance, I have discussed with you this point in much detail. And the point which we discussed in much detail was, what are financial instruments? So financial instruments are those instruments which can be further divided into two categories. They could be equity instruments, they could be debt instruments, where you can invest your funds, and against the investment you can earn the profit or returns accordingly. So the financial institutes which are involved in the acquisition of shares, stocks, bonds, debentures issued by government or any local authority, or maybe a registered firm, maybe a registered company or a public company, they are termed as NBFCs. Third point is, the institute which is involved in the purchase or sale of any marketable security. Now, any marketable security, it could be the security which can be marketed. For example, we have nature, we have leasing, we have hire purchase, insurance business, we have chit business. They all are involved in the same. So remember these first 3 points. If someone asks you what is NBFC, so NBFC is a financial institute which is involved in financial activities. The question is, which all financial activities are basically performed by NBFC. So they are involved in accepting deposits, or they may be involved in accepting or providing loan or advances. So they are involved in the purchase or in the acquisition of shares, which could be preference shares, which could be equity shares. They are involved in the investment in the financial instruments, which include bonds, debentures, and other securities, or they may be involved in the other marketable securities of a like nature, which could be, I would say, other marketable securities. Then they are involved in a process of leasing, they are involved in a process of hire purchase, or they are involved in insurance businesses. Then also they are termed as, they can be termed as NBFCs, or they are involved in chit funds or chit business. Now I don't know how many of you are aware of this fund, that is chit business or chit fund. Chit business or chit fund is related to Sharda Group, which was in news for not fulfilling its promises. So chit fund is basically a format where investors they invest in very small amounts, and that small amount is utilized by the chit fund raiser, and against using that amount they pay the return. So those companies which raise funds at a very small level, at a very chitty level, the way we say kitty parties, in a similar manner we have a word chit. So kitty word has come from chit only. So chit fund companies are those companies where you invest your funds at a very small level, or you invest very small amount of funds on regular basis, and that amount is given in the form of return, or I would say that amount is returned with a big or huge profits or returns. But which all companies cannot be termed as NBFC? We have an answer for that as well. So any institution, particularly which is in the, or which is related to the business, that is agriculture activities, which may be related to the industrial activity, which may be related to the purchase or sale of goods, which is related or providing any kind of services like Testbook, like PhonePe, they all are the service providing companies. But if I say Testbook, it's providing services, but it has nothing to do with the finance. It has nothing to do with finance. Similarly, Infosys, it is a service providing company. It has nothing to do with finance. But on the other side, if I say PhonePe, if I say Amazon Pay, they are the service providing companies. These are the service providing companies which are involved in the financial activities, whether they will be termed as NBFCs or not. Or I would say, if I ask you a question, so fintech like PhonePe or Amazon Pay, can I say these fintechs, these are NBFCs? Yes or no? I will be answering this question in some more days when we will be talking about fintech in much detail. But please keep this point in your mind that PhonePe, Google Pay, are they eligible to be termed as, NBFCs? If yes, well, we call them as NBFCs or not. If we don't call them NBFCs, why? If we call them NBFCs, why? I will be answering all these questions in my upcoming days to go. Chalo ji, let's move on to the next point and the most important part of our session, which says, whenever we talk about NBFCs, NBFC is basically a company and has a principal business of receiving deposits under any scheme or any arrangement, and this deposit can be in the lump sum manner or it can be in the installment manner. So along with three functions which I told you, that is deposit or advances, acquisition of shares, or I would say for that matter financial instruments, and what was the third term? All those financial institutes such as insurance companies, chit fund companies, or all those institutes which are involved in insurance business, chit fund business, leasing business, hire purchase business, they are termed as NBFCs. Along with that, NBFCs, they have a power to accept deposits as well. They have a power to accept deposits as well. Got it, guys? Now, moving on to the next point. Housing finance companies, merchant banking companies, stock exchanges, these all companies which are engaged in the stock business, in the sub-broking business, all these companies, they can be termed as NBFCs, but they are accepted or they are exempted to be registered under the RBI Act 1934. So what I'm trying to say, this thing, that in general, NBFCs are those financial institutes which are operating according to Section 45 of RBI Act 1934, or I would say they are registered with RBI under Section 45 of RBI Act 1934. But on the other side, if we talk about insurance companies, they are registered under IRDAI. On the other side, if I talk about housing finance companies or merchant banking, stock exchanges, all these institutes, they are registered in different acts. So they are part of NBFCs, but they are not 100% NBFCs because they are not registered under RBI Act 1934. So in short, I would say all those financial institutes which accept deposits, provide loan, and they involve in investment in the financial instruments. They are involved in the investments in the financial instruments. They can be termed as NBFCs, and all those financial institutes which are registered under Section 45 of RBI Act 1934, or they are operating as per the conditions set by RBI under RBI Act 1934, they are termed as NBFCs. And other companies like insurance companies, they are registered under separate act. They are regulated by the separate authority. For example, for insurance, we have IRDAI. For stock exchanges, we have SEBI. So they are registered accordingly. Is it clear, everyone? Is it clear, everyone? This is a really very important point which you need to understand. If someone asks you that insurance company is an NBFC, technically yes, but do we call it as an NBFC? No, sir. Why? Because it is not registered under RBI Act 1934. Rather, it is registered under IRDAI, which is the regulatory authority. Secondly, if I talk about stock exchanges, are they NBFCs? Yes. But can we call them 100% NBFCs? No, because they are not registered under RBI Act, or they are not operating as per the RBI Act 1934. Rather, they operate and they are regulated and they are registered under SEBI Act 1992. Is it clear? So with passage of time, when we will be reading, we will be understanding n number of financial institutes, you can easily identify that whether this institute is an NBFC or it is any other, or it is any specific financial institute like we have the insurance companies. Chalo ji, let's move on to the next point. The next is the very important question, that is, what is a difference between an NBFC and a bank? So whenever we say NBFC and a bank, I'm writing NBFC over here and I'm writing bank over here. So please be with me, try to understand this point very carefully. As I said, bank is responsible to accept deposits. So bank can accept demand deposit and term deposit. What is the difference? Demand deposit means a type of deposit where you can make deposit whenever you require, where you can make withdrawals whenever you require. For example, saving account, current account, that is demand deposit. And what is term deposits? Are FD, RD, where you deposit the funds for pre-decided time period. That could be 6 months, that could be bare minimum 7 days, that could be maximum for 10 years. But on the other side, if I talk about NBFCs, sir, NBFCs, they are allowed to accept term deposits only. They are allowed to accept term deposit only, and that too there is a condition. In case of NBFCs, they can accept term deposit up to 5 years, but banks, they can accept term deposit up to 10 years. मतलब ये हुआ कि अगर आप बैंक में जाकर FD करवाएंगे तो बैंक की जो एफडी होगी वो कितने साल तक की हो सकती है सर? 10 साल की। लेकिन अगर आप किसी एनबीएफसी में, जैसे मुथूट फाइनेंस है, वो एक एनबीएफसी है, तो अगर आप मुथूट फाइनेंस में जाकर, अगर मुथूट फाइनेंस लेट्स से एफडी देता है, सर्विस देता है, तो वहां आप 5 साल से ज्यादा समय की एफडी नहीं करवा सकते। ये आपको याद रखना होगा। इज इट क्लियर एवरीवन? ओके। Second point is, sir, NBFCs, they cannot issue check. NBFCs, they cannot issue check, but banks, they can issue check. The reason behind is, check is a very simple term to understand, but the logic behind is, banks, they are registered under Payment and Settlement System Act 2007. On the other side, NBFCs, they are not registered under Payment and Settlement System Act 2007, due to which they are not allowed to issue checks, because the check clearing cannot be done, because check clearing is done under Payment and Settlement System Act, and if you are not registered under those particular act, obviously you cannot issue the checks and your checks cannot be settled. Your checks cannot be settled. I don't know how many of you are aware of this point, but that is very important to understand. Whenever you deposit your funds with a bank, whenever you deposit your funds with a bank, in that particular case, your funds are insured. If you are a depositor, your deposits are insured, which means if in near future anything goes wrong, bank goes insolvent, that means bank दिवालिया हो जाता है, बैंक रन हो जाता है, बैंक के पास पैसे नहीं है to pay your deposits, in that case your certain amount is insured, and that insurance service, your certain amount is insured, and that insurance service is provided by whom? So that insurance service is provided by DICGC. That insurance service is provided by DICGC. What is this DICGC? Sir, it stands for Deposit Insurance and Credit Guarantee Corporation. What is this? Sir, it is basically a subsidiary of RBI, which is responsible to provide, or which is responsible to ensure the public deposits with public deposit with all the scheduled banks. Public deposit with all the scheduled banks. But if you are an NBFC, then in that particular case, public deposit is not insured. Public deposit is not insured. I'll take a very simple example to explain you this point. Let's suppose you deposit few lakhs. I'm not getting into nitty-gritty. Chalo, let's go into nitty-gritty as well. Let's suppose you have deposited 5 lakh rupees. Let's suppose you have deposited 5 lakh rupees with SBI. You have deposited 5 lakh rupees with SBI, and along with SBI, you have deposited 5 lakh rupees with Muthoot Finance. Why I'm taking 5 lakh rupees? There is a reason. Because in case of DICGC, what is the limit? Sir, limit is, or what amount is going to be insured? Up to 5 lakh rupees per individual per bank. Per individual per bank. So one individual's only 5 lakh is insured, not more than that. So I've taken an example of 5 lakhs. If your deposit is less than 5 lakhs or up to 5 lakh, and if let's suppose in near future SBI is declared as insolvent, that means SBI मर गया, SBI insolvent हो गया, don't worry, DICGC will give you 5 lakh rupees of check. Let's suppose 5 लाख की डिपॉजिट था तो 5 लाख ही मिलेगा. अगर डिपॉजिट 6 लाख हुआ तो भी 5 लाख मिलेगा, और अगर डिपॉजिट 3 लाख हुआ तो उस केस में आपको 3 लाख प्लस क्या मिलेगा? इंटरेस्ट. तो कितनी वैल्यू इंश्योर्ड है? सब प्रिंसिपल प्लस इंटरेस्ट मिलाकर अप टू 5 लाख रुपीस इंश्योर्ड है. बट अगर मुथूट फाइनेंस भाग गई, इंसॉल्वेंट हो गई, तो उस केस में आपको कोई रिटर्न नहीं मिलेगा. किससे? DICGC से. बिकॉज द डिपॉजिट्स ऑफ म्यूचुअल फंड कंपनीज, दे आर नॉट इंश्योर्ड अंडर DICGC. They are not insured under DICGC. Is it clear, everyone? Is it clear till this point? So next time if someone asks you, this is very important. If next time someone asks you what is the difference between a bank and NBFC, so sir, bank is a financial institute which is registered under RBI Act 1934 and it fulfills the Banking Regulation Act 1949. It fulfills the Banking Regulation Act 1949. But on the other side, if I talk about NBFCs, sir, NBFCs, they are registered under Companies Act 1956 as well as they are operating as per RBI Act 1934. They are registered under Section 45 of RBI Act 1934. Banks, they can accept deposits, both term deposit and demand deposit, but NBFCs, they can deposit only term deposit. NBFCs can accept term deposit up to 5 years, and banks, they can accept term deposits up to 10 years. NBFCs, they are not the part of Payment and Settlement Act 2007, and that is the reason they cannot issue check, but banks, they can obviously issue checks. Public deposit with the bank is insured with DICGC, which is the subsidiary of RBI, but the deposits of NBFCs is not insured with DICGC. These are the difference which we have between what? So between NBFC and bank. Between NBFC and bank. But how we say a company can be termed as NBFC? First of all, company should be registered under Companies Act 1956, and company should be operating as a non-banking financial institute. And what defines the non-banking financial institute? So it is defined under Section 45 of RBI Act 1934. Along with that, it should be a company registered under Section 3 of Companies Act 1956. The minimum net owned fund, when you set up NBFC, the minimum net owned fund should be 200 lakh, which means 2 crores. But this net owned fund can be different for MFIs, it could be different for factors, it could be different for CICs. Now you must be having a doubt what is the difference between CIC factors, which I will be discussing later on. But right now, if someone asks you net owned fund, so net owned fund of an NBFC is what? So net owned fund of an NBFC is 2 crore and NBFC should be registered under Section 3 of Companies Act 1956. Now, there is a new term related to NBFC which is known as systematically important NBFCs. We have systematically important banks. We call them as systematically domestic important banks, which means the banks, or I would say the banks on which the entire banking sector is dependent, or I would say if these banks, they are not working properly, the entire banking sector will be affected. Right now we have 3 in that case: ICICI, HDFC and SBI. Similarly, we have systematically important NBFCs, but how we define them? So systematically important NBFCs are those NBFCs which possess asset size of greater than 500 crore, which means if the NBFC asset size, that means the company's total asset value is of 500 crores or more. Now, if you don't know what is asset, asset basically means anything. Asset basically means anything which can be converted into cash in near future. For example, land, building, machinery, everything is termed as asset. So if the company's asset is more than 500 crores, then, or I would say NBFC's asset is more than 500 crores as per the last audited balance sheet, then it will be termed as systematically important NBFC. If not, then it will be termed as only NBFC. Simple. उसमें तो कोई problem है ही नहीं. Remember that the rationale for such classification is that the activities of such NBFCs. अब इसके पीछे reason क्या है कि सर हमने ये क्यों बनाया systematically important NBFCs, ताकि हमें पता चल जाए कि जो बड़ी NBFCs हैं वो कितनी हैं, कैसे काम कर रही हैं, ताकि उन्हें चेक करके RBI कहीं ना कहीं directly indirectly NBFCs को regulate कर सके in a better manner. Clear? Got it? So what we have studied today, till now we have studied the first thing. What is NBFC? After studying NBFC, what all activities the NBFCs are involved, which all companies can never be termed as NBFC, we have discussed. Then we have discussed which all companies are NBFCs, but they are not termed NBFCs because they are registered under some other regulatory authorities. Then what is the difference between bank and NBFC? We have discussed how an NBFC is registered with RBI, and in the end, we have discussed systematically important NBFC. Now today at 9 p.m. on Testbook application, I will be coming up with a master class where I will be moving ahead with NBFC part 2, where I'm going to discuss different types of NBFC. The first one, I'll start with asset finance company. I'll move to investment company, loan company, infrastructure finance company, systematically core investment company. Then we'll discuss infrastructure debt fund company. Most important is microfinance institutions, very important. Then we will be discussing factors, forfeiting. Then we will be talking about the mortgage guarantee companies. So these are going to be the important areas which we are going to discuss today at 9 p.m. on Testbook application. If you want to clear your RBI Grade B 2025 examination in the very first go right now and enroll in our Lakshya batch. Use code MADHAV. The moment you will use this code, you will enjoy maximum discount so that you can prepare pretty well. You can prepare pretty well for upcoming examination. If you want to download the PDF of this session, you can scan this code. This is my Telegram channel, which is by the name Economics by Madhav Arora, and my handle is Madhav Arora. The moment you will type Madhav Arora, you will reach to my channel, subscribe it, and I will be sharing the PDF of this session over my channel in next few minutes. So that will be all from my side, guys. We'll catch you in the next session. Thank you for joining. Good luck. God bless you all. See you at 9 p.m. on Testbook application.